poverty. Now, until independence in 1960, Nigeria was mainly a production center for the economic benefit of the British. After attaining self-governance, it took advantage of its vast arable land and trade linkages to become a net exporter of agricultural products, which formed a large percentage of its foreign earnings. AIT News correspondent Larry Babalola, in this special Independence Review report, examines how Nigeria has fared in terms of trade and production of goods and services over the last 6 decades.
Prior to 1960 and 2 decades afterwards, Nigeria operated one of the most diversified economies in Africa. The regional structures of the country at the time was built on massive agricultural production as its economic backbone. The northern region was a massive food and cash crop production center, from groundnut, ice and skin, cotton, textiles, iron ore, and solid minerals. The western region invested massively in cocoa production and other food crops, while the old eastern region was a sprawling estate of palm oil and rubber plantations. These were not just produced for local consumption, but through the various commodity boards, Nigeria became a net exporter of cash commodities.
Where were we, where are we now, and where are we going to? Many years ago, we used to export virtually everything. We're an export-dependent country. Our trade balance was always positive, meaning that we were exporting far more than we were importing in those days.
Those glorious years were gradually supported by indigenous processing of raw produce for export, making Nigeria a major trading country and laying the foundation for its transition from a trade in primary product to finished products. The effect was quite obvious in the value of currency. Up until the early 1980s, the Naira was at par with other major currencies. According to the World Bank, at independence, Nigeria's GDP was $4.20 billion and its per capita income was $93. Agric export accounted for over 75% of foreign exchange earnings and 68% of GDP, while creating employment opportunities for about 65% of the population.
We've also realized that the oil cannot solve all the problems. And that's why government and indeed the private sector, we're all working very hard in collaboration to increase the non-oil exports. And there's one area which has been fully neglected, that is tourism. With what our youth and women are doing in the creative space, that in itself, like I always tell people, Burna Boy is bigger than all our oil blocks. If we fully harness it, you laugh. It's true.
We're still a primary product economy. So aside from the fact that we all have, you see, our work is cut out for us. We have to work really hard to ensure that we're doing a lot more. But we also have to ensure that we're adding value to what we're pushing out.
All of that suffered a downturn when the oil boom set in the mid-70s, making Nigeria to neglect its strong agricultural and light manufacturing basis in favor of an unhealthy dependence on crude oil. In no time, crude oil replaced agriculture, accounting for more than 95% of export earnings and over 80% of federal government revenue.
When oil came, Nigeria realized that they could make so much money from the sale of oil than from the sale of all the cash crops of cocoa, palm oil, sesame seeds, groundnuts that we used to have. So it's been a shift.
That is not sustainable. And funnily, the government has resorted to tax to complement oil income. But again, that is oppressive to the citizens.
That was the death knell on Nigeria's once diversified economy, dealing a massive blow to a once boisterous economy, especially during the famous crude oil price collapse of the mid-80s. The focus on crude oil led to a steady erosion of the competitiveness of non-oil tradable goods, reflected in a substantial decline of agricultural export.
We have more than 20 import items that are in the billions of dollars. Pharmaceutical, 2 to 3 billion every year. Wheat alone, 4 billion every year. Fish, milk, sugar, 1 billion each every year. What are we talking about? However, this also should be businesses that people should be trying to create to fill that gap. Because on the export side, we have only 2 items, which is petroleum and gas and fertilizers. They're the only things that are in the billions, So we know our problem, but I think we're being a bit delusional.
According to the International Monetary Fund, IMF, by 2002, Nigeria's per capita income plunged to about 1/4 of its mid-70s high, below the level at independence.
The cost of production in Nigeria is extremely high. Most industries run 12 to 18 hours on generator.
63 years after independence, Nigeria has managed to hold its status as Africa's largest economy, a position critics say does not represent its true potential. Successive administrations have preached a return to the economic base of the 60s and 70s, with massive funding to support crop production and development of the value chain. But this has yet to translate into a shift from oil and gas dependence. Economists have noted that it is not too late, as more trading opportunities exist in the 21st century economy beyond agriculture, which can become key drivers of growth through trade if the Nigerian government puts the right environment and policies in place. These include investment in digital technologies through the manufacturing of microchips and other globally sought-after ICT hardwares. Nigeria also needs to fully utilize its vast deposit of solid minerals by taking over control of its mining sites from criminals, which have led to huge revenue losses to the government over the years. Lanre Babalola, AIT News, Abuja, Nigeria's capital.